Yo, welcome back to the show. So if you watched last week's recap video, it was episode number 11, and it kind of recapped the first 10 episodes. If you don't want to watch all 10, that recap video is a pretty good one. It kind of sums up a little bit of everything that we talked about in the first 10 videos. Today, we're going to kind of switch it up a little bit. We're going to talk about REITs. So REITs, what does it stand for? It's Real Estate Investment Trust. And it's a really good way to get involved in real estate without having to do any of the dirty work, and you don't have thousands of dollars saved up for an investment property. A REIT is a very good option for you. REITs are essentially a company or a corporation that takes investments from investors and they go out and purchase property with it. This allows large investors, with thousands or millions of dollars that want to invest in real estate. It also allows small investors that have, 50 or $100, but they just want to get into investing. So it allows people of all income levels to get involved. And there's a couple different kinds of REITs out there. So first we got equity REITs, and this is where your money that you have invested in this particular REIT or corporation, they'll go out and buy property and rent them out and receive revenue from that. As an investor, you receive a small portion of that rent every single month. Second, we got mortgage REITs. This is essentially, it's kind of self-explanatory, but these REITs or these companies will go purchase mortgages and the investors will receive income from the mortgage interest or the interest earned on those mortgages. And third, you've got a hybrid REIT, which is just a combination of both. So the benefit to purchasing these REITs is it offers smaller investors the opportunity to purchase real estate when they wouldn't be able to otherwise. Because a lot of these REITs are bought and sold on all of the major exchanges. And you can find REITs that range in all price ranges. So there's some REITs that only cost $7 per share. Some of them are 130, but it's very easy to buy and sell these shares as opposed to if you were going to go buy an investment property or sell an investment property. You have to go through the whole buying process, the whole selling process. And with investment properties, there's a lot of money you need to bring to the table in order to purchase. So it's super liquid in the fact that you can buy and sell these shares pretty much by the click of a button. You don't have to do any of the dirty work. If you're an introvert, you don't have to deal with any people. But yeah, REITs are publicly traded companies, so you buy and sell shares just like you would with a stock. There's a couple kickers to this too. So first, REITs must pay out 90% of their revenues in the forms of dividends to their investors. For example, if a REIT receives $100 in revenue, they have to pay out $90 of that to all their investors. And I think that has to do with something with the IRS or the government, why they have to pay out at least 90% of their revenues. But nonetheless, it makes it super attractive for any investor of any income level. With that said, the second kicker of this, a lot of these REITs pay out their dividends or their profit that they receive from the income from the rent or whatever it is. A lot of these REITs pay out every month, just as you would if you purchase an investment property and you're renting that out to a tenant and they pay you every month. It works the same way. So the more shares that you own or the more shares that you purchase of whatever REIT that you choose, the more you'll get paid every single month. Now I'll give you a couple examples of some REITs that are out there. And the first one is Realty Income, ticker symbol O. If you go on Robinhood or you go on Schwab or whatever you use and you just type in the letter O, Realty Income will pop up. Realty Income is super interesting because they own like 6,500 plus different commercial properties. They're in like 50 something different industries, and they're in all 50 states plus Puerto Rico and the United Kingdom. So they're super diversified, and their top 20 holdings or their top 20 tenants that they rent out to, that they rent these properties to, are super reliable and super well known. So you have like Walgreens, 7-Eleven, FedEx, Lifetime Fitness, Walmart, companies that won't really go away anytime soon. Gas stations, grocery stores. So when COVID hit, they didn't really take much of a hit when it came down to the share price. Walmart was in super high demand. Walgreens, another one of their holdings is Dollar General. That's kind of why I like these guys, because they invest in properties and rent out those properties to some pretty reliable companies. But something to note is that's kind of part of the risk and reward in investing in REITs. That share price goes up and down depending on how the real estate market does. So it's not something you really can control, like with an investment property that you actually purchased and you're renting out to tenants that you've screened and and you can reach out to them if they're not paying their rent. But it's just something to keep in mind. And there's all different kinds of REITs out there that invest in a bunch of different types of properties. There's REITs out there that primarily invest in apartment buildings, nursing homes, shopping malls, retail stores, restaurants. So when you're picking out your REIT, make sure it's something you believe in or that you believe will be there in the future. So that's kind of a REIT in a nutshell, or what a REIT is. But if you have any questions about this, shoot me a text or give me a call, shoot me a DM, whatever, because I actually personally invest a lot into these real estate investment trusts. It's a great source of monthly income. It's well diversified. I don't believe real estate is going anywhere. I don't think commercial real estate's going anywhere. I think real estate in general is getting a lot easier to buy and sell. And it's super straightforward and it's very easy to get into REITs. If you look up REITs and kind of some pros and cons and stuff like that, you'll see that they don't grow very quickly. There aren't many REITs out there that have super high capital appreciation or share price appreciation. You know, it's not like Tesla, who grew 1,400% last year, and it's very small and very steady growth. Just gonna ballpark this, but I think REITs kind of average like maybe 4 or 5% year, but it's that monthly cash flow that you're receiving from the shares of these, which I think is the biggest kicker. And I'm just going to throw a disclosure out there in case YouTube goes after me here. I'm not affiliated with Realty Income. They did not pay me to promote any of this. I think it was just a really good, really easy example to kind of show you an idea of what these REITs look like. Anyways, got any questions, let me know. Love this stuff. But otherwise, I will see you next week.